From the floor of the CME Group, this is Danny Riley on today's Cash Close. Geez, I hope I get it right this time. The name of this video, S&P down 6 out of the last 7 sessions. The high of the day in the S&P came in at 1951.70 early morning. The low came in at 1928.20 recently. And last, we're 1928.5. We're down 27.5 handles. Total volume, 2 million minis trade and 5,000 big S&Ps trade in the pit. MOC, we had 550 million to sell. I want to remind everybody, no one ever promised us a rose garden. Tomorrow we have the MBA Purchase Applications. We have Charles Evans from the Fed speaking. We have the EIA Petroleum Status Report, and we have a 10-year note auction, and we have the Fed Minutes. Now look, Alcoa kicks off the third quarter earnings seasons tomorrow on a very, very sour note. Today's trade was what I consider to be a big mammoth sell program. Yesterday when the S&Ps closed, even though they had a small buy imbalance, they got really weak in the latter parts into the 3 o'clock and 3:15 close. That told me that we were going to probably be down, but I got to admit it, I'm very, very surprised at how weak the S&P got today. Now, I want to talk a little bit about the Thursday, Friday low, the week before the expiration, and how this is all going to play out. I know you guys are going to think I'm crazy, but I'm starting to think that we're getting very close to some type of real low, some type of real bounce. Now, I'm not saying that that's going to happen today or tomorrow. I think what's going to happen is those statistics for the expiration study show Friday being up 20, down 10 of the last 30, and then on Monday, you've got up 23, down 7 of the last 30. Now, what I plan on doing, I'm not talking about what you guys are doing, but I'm starting to look for some cheap November calls. I think that the S&P is way, way overdone, but that, and again, I want to reiterate something. That doesn't mean that we can't see a retest of those 1875 lows that we had last week. And the other part about it is, I think that the real level on the downside is 1885 to 1890. I think that is where the S&P would really find its major support. But that said, what I'm going to be doing is I'm going to start looking at the November 8th, 1980 and 1990 calls, and I'm going to try to plan this into going into Thursday, late on Thursday, buy half my position on Thursday, and then buy my other half on Friday, and then pray that the markets start to go up. This is what I call an option lottery ticket trade. We're not going to spend a real lot of money on this. I'm going to define my risk going into it, and you know what? I'm going to see how this plays out. Because I think the stats are all positive for next week, minus Tuesday, and I think we're getting very close to a saturation point where the S&P is going to bounce. I told you guys I thought we'd get past the September expiration. I said that I thought we'd see selling into the third quarter rebalance. I said that I thought the spooky month of October we could see some downward price action, but I don't think it's going to last. I'm still talking about some type of year-end pushback up to S&P 2100 with a year-end settlement of 2085. I'm going to leave it like that, you guys. The markets are on a down note. And one last thing. Top Notch came out late in the day, during the day, and said that he thought that if we really started going down, and he kind of indicated that we would, that the S&P could go to 1927.5. I want to tip my hat off to Tim. That was a great call. I'm going to leave it like that, and I'll see you guys tomorrow on the opening print.